name's LeCoque. I'm the executive chairman of SourceBio. I've got about 25 years experience in the life science industry, primarily focused on UK listed life science companies, more in the emerging side of the business. I had the opportunity to work and live in the UK when I was early in my career, and I learned how to say things like "Lou." So I've been fortunate in spending a lot of time in the UK with life science companies. I was CEO of SourceBio from 2000 to 2015. I joined SourceBio in 2016 as a non-exec chair, and in 2017 became executive chair. Just disclaimers there, disclosures. I gave you my background. Tony Ratcliffe's our CFO, very capable financial addition to the business when we took the company public. He's had strong operational and strategic experience in life sciences and technology. It's been a great addition to the team. I also want to credit everybody on the management team and the entire company for helping us deliver what is a great set of results here. H1 overview. We are a leading provider. For those of you that don't know, and I know some of you might have dialed in at a previous presentation, but for those of you that don't know, Source is a leading provider of laboratory services to blue chip pharma, NHS, and private hospitals. We've got 4 main business units, which we'll go through in a bit. I just wanted to talk about the increase in revenues to 37.3 over last year's 10.6. Dramatic growth in profitability, adjusted EBITDA 11.2 versus prior year of 1.7. EPS way up. Strong trading in Q3 by record PCR volumes. We talked about COVID earlier tonight. I've got some updates on COVID. There are changes in travel rules, which will come into effect on the later this month. We're not sure how that's going to impact testing, although we are still seeing some very strong testing volumes on the COVID side. In fact, September is our largest month we've ever had from a volume perspective. What we're doing now in anticipation of COVID sort of being a less large part of our business is to focus on M&A, particularly in healthcare and predictive medicine. We've got 2 divisions that are focused on those. I will get into that in a minute. We have invested in our labs and equipment and personnel, and we are well positioned for future organic growth, but certainly we want to add to that on the M&A side. And we've got an expanding list of blue chip clients that you can see below. Just some operational highlights from this past year. We dramatically increased our capacity for COVID testing in our COVID lab in Nottingham. We increased it to 20,000 tests a day. We are reaching those in September. We are building an analytical services lab capability in our storage business in Rochdale to support new and existing customers. We have a microsterility lab in Tremor, Ireland, which is another storage site for us, and that's going to build our capabilities to support our customers for more and increased testing. We've expanded our San Diego lab to include infectious disease, and we're starting that business in Q4. It took us a while to get FDA approval, but we're doing that, and we've got some strong demand coming out of that site. One thing of note is we've recruited Nick Bills as director of our healthcare business, and also which includes infectious disease and cellular pathology. He was former national pathology manager for Nuffield Health, and he's just been a great addition to the business. I just wanted to highlight that. We're continuing to upgrade our commercial approach. Oftentimes with early stage companies, they're much more scientific and much more focused on the science. We're more focused on the benefit to our customers, and that's what we're continuing to do from a commercial perspective. We're implementing a one source key account program to sell Source across big pharma in multiple locations at once. We did that at Celsius, where we would call on one senior calling point and perhaps be able to influence the purchasing decisions of 10, 15 sites around the world. We're planning to do that same thing with Source. And we are going to relocate our Cambridge lab to the Science Park and expand our NGS, which is next generation sequencing and biopharma services, into 2022. So a lot going on. Like I said earlier, a lot of good people making things happen. Just some quick financial highlights. I know I talked about this earlier, but revenue increased 252% to 37.3 million. Very solid growth. Gross profit increased to 252. Adjusted EBITDA nearly 7-fold, 11.2 million. EPS up strongly versus prior year of a loss. Cash generated from operations is up significantly. In fact, our cash balance now is significantly higher than that, and I'll talk about that later on. We further strengthened our balance sheet. 17.2, we're much stronger than that. Strong working capital conversion, over 100% of EBITDA in H1 2021 versus 45% in fiscal year of 2020. So very strong working capital conversion. We are debt free. Borrowings last year included some PIK notes from from being private, but we are debt free and looking forward to remaining so, to be honest with you. Infectious disease testing overview. Let's just talk about this business unit in particular. Business unit revenues of 28.4 versus full year last year of 34.5. We are a leading provider of COVID-19 PCR testing services to major pharmacy retailers, major travel and corporate partners, and healthcare providers. Recent changes to the travel rules, as I talked about earlier, will reduce, however, not negate the need for PCR testing. I won't say anything more than that, but I think the lateral flow tests that are coming out may not be able to meet the need, and we'll see how that shakes out. We do see a need for COVID testing. We talked earlier about how people are in hospitals COVID is taking over all of the NHS hospitals, quite frankly. It's slowing down elective surgery again, which we're picking back up, but they're slowing those down. So COVID's going to be with us for a while, and we're going to be very opportunistic on supporting this need, but also expanding the rest of our business. We have gone into lateral flow devices if needed. We certainly have two very, very good offerings from Excalibur and Everything Genetic. We do whole genome sequencing of positive PCR results. We're one of 8 labs in the UK with this capability. We do have a rapid test up in Liverpool Airport, which we'll see how that shakes out. That still may be in demand. We've got a quantitative antibody test that's actually finished with validation. This presentation was from last month. And we are expanding into respiratory disease panels that will be a flu test, type A, type B, RSV, plus COVID-19, which may be more of a sustainable business model for hospitals. I think they're always going to want to know about COVID, but certainly type A, type B, and RSV are going to be important. And that's something we're actually launching right now. Our UCAS accreditation is critical to our competitiveness. And we, as I mentioned earlier, we're expanding our COVID facility into our COVID presence into the US via San Diego. I'm not going to spend a lot of time on this. I just wanted to highlight the demand curve here for PCR testing. And you can see that, last year we thought we were at the peak of this pandemic. October, November is sort of when it came up. We thought we were through this. We thought we were coming back down. And you can see from this chart that we are well above the volume that we were at the prior, what we thought was the peak. So that is continuing. September is very, very strong. October is very strong. We'll have to see what happens when the travel rules change, but we certainly have healthcare providers that we're also servicing. Shifting gears a bit, let's talk about healthcare diagnostics. This business unit last year was fairly heavily impacted by elective surgeries being delayed. It was 4.4 for fiscal year 2020. It was 7.3 in fiscal year 2019. This business pre-COVID was growing circa 40% a year because of the shortage of pathologists in the UK and actually around the world. And we have stepped in to become the leading cellular pathology partner to the NHS, private healthcare companies, over 130 NHS trusts. And as I said, this is an opportunity that had been impacted by COVID. We are seeing these elective surgeries come back, in fact, very strongly. The volume we have now in cellular pathology is higher than it was in 2019. We'll have to see what happens with this current new outbreak, because I do hear that we're getting hospitals filled back up with COVID patients, but we are gearing up to grow this business post-COVID. There's a national pressure to clear elective surgery backlogs. Digital pathology, just so everybody understands what that means, I've got a graphic on the right here, which many of you may have seen before, but I'll go through it again. We basically take tissue samples from the NHS or private hospitals, process those down, put them on slides, send those slides to pathologists in our network, who then give us a result and turn around in 5 to 7 days, and we give a result back to the hospitals. With digital, we take a digital image in Nottingham, or even at the local hospital, and we send those digitized images to our pathologist. So we're cutting out days of turnaround time. We're cutting logistics costs out of the equation. We're actually expanding our bandwidth because there's an AI capability related to digital that can screen out some of the base cancer cases, and our pathologists can focus on more highly complex cases, which is where they want to be anyway. So this is an area that we're expanding, and as the market picks up and as these elective surgeries come through, this will help the backlog, putting a lot of these cases onto a digital platform. We do have specialized diagnostic testing and precision medicine. There's an increasing bridge between genomics and pathology that we're working to build and actually grow. And I think another opportunity for us is private healthcare in London and beyond. We haven't really done much with private healthcare in London. That's a big opportunity. We've been primarily focused on NHS, but I think certainly private healthcare from the COVID experience is giving us inroads into that for the cellular pathology business. Just gives you an idea of the market overview of what we're talking about. There's significant amounts of pounds being spent on pathology in the UK annually. We are in the pathology reporting space. We are a lead provider. There is other opportunities for us to get into more than just reporting market share. We could insource and outsource pathology labs. So we are looking to grow this business substantially. It's a growing market. And again, I think the underlying theme here is the shortage of pathologists in the UK means that outsourcing is going to become an increasing need for not just the UK, but around the world. Again, I just wanted to, I won't spend a lot of time on the numbers, but I did want to show this graphic on the right to give you the impact of COVID on our business. So you had, monthly cell path revenue in late 19, which was at record highs. It was growing at, like I said, 40% a year. You had COVID come in and literally almost decimate this business unit, which is one of the reasons we pivoted into COVID, by the way, that we saw this coming and we knew we had to do something to protect the business. COVID came in and actually was better than just a hedge. It paid itself off many times over, but that was the impetus for us to get into COVID. Once you see it picks up a bit in late 2020, as I mentioned before in the COVID chart, and then it went back down again. But now we're seeing it come back up. And I will tell you that September, that forecast we are achieving, October is very, very solid, excuse me. So this business is coming back very, very strongly, and we are working overtime to make sure we can capitalize on this business opportunity. I think the other point I wanted to make here is many of our competitors can't hire lab staff. They can't hire good people to do the lab work. We have many, many people on our COVID side of the business that could move to our cellular pathology business. In fact, many of the people in cellular pathology moved to COVID when we made that transition. So we are uniquely positioned to take advantage of the need for this increased amount of cancer screening. I just wanted to point all that out on this one slide. So let's talk about genomics, which is another one of our business units. Revenues at 2.6 in H1 versus 4.2 full year. This was impacted by COVID in Q2 of 2020, but it has continued to grow from there. We are focusing on next generation sequencing. We also have Sanger sequencing, which is an older type of sequencing, and it's still done quite a bit in drug development and research, but next generation sequencing is where we want to be. We've invested in a NovaSeq from Illumina, and we have seen that business in particular grow very, very strongly this past year. We've got a very strong commercial sales team that knows the industry and knows the customer base, and we are moving NGS services into San Diego as quickly as we can. There's a huge market in San Diego for sequencing, and we're going to move to take advantage of that. Revenue-wise, you can see the two business units, and you can see the differences between Sanger, which is the larger piece of our revenue, but the growth rates coming from NGS. And I think one thing I wanted to point out for those of you that might have been on a prior presentation, in 2019, our mix was significantly more of Sanger than NGS because we were focusing on too small of projects without a lot of revenue. We've now made the decision, and we have done that with the Illumina system I talked about, to go larger projects, higher revenue, higher gross margin. And that's what you're seeing with the light blue on the charts on the right. And there's room to improve here. But I think that's where the future of this business is going to be. Let's talk about stability storage, which is now sort of the third base business that we had prior to COVID. H1 revenues at 3.6. Last year was 6.9 for the full year. It was impacted by COVID. We have a service and validation unit, and we have new equipment that was stalled due to lockdowns. People put less product up on stability storage and new product development, so it slowed down. That being said, it remains a very high margin of recurring revenue business. Storage margins are 80% plus. In fact, I think now they're about 85%. And stability storage data, and what that means is compounds need to remain stable. Drug products, consumer products need to remain stable on the shelf at various environmental conditions around the world. We need to mimic those in chambers and store that data for pharmaceutical and consumer healthcare companies. That's a regulatory requirement. And we are working with them to make sure we continue to meet their needs going forward with new products and also retaining existing products. We've got an expanded stability storage sales team. We are focused on storage equipment, although I will say that the focus of our business is storage. That is the highest gross margin. Service and validation is another nice piece of our business. And we are building, as I mentioned earlier, laboratory services to support the need of our customers to show the data. Right now, before we got into this analytical services capability, they would be testing the products off-site. We're now offering that testing on-site. So it's a nice, easy way to expand our business with our existing customer base. A typical storage contract lasts 3 years with multiple studies from each client, meaning longer term revenue streams and predictable. And then the need for equipment sales obviously drives service and validation. So, you know, not exactly the sexiest business unit here, but it's a very profitable, very solid piece of our business. I won't really get into much more than I just said. I kind of covered all of this in one slide. You can see the various, you know, the storage is obviously about half the business. Service and validation is larger than our equipment business, which is what we call manufacturing. So storage services and service and validation are both higher margin businesses, and it's a very solid, predictable revenue stream here. One thing I did want to focus on tonight, and we did share this presentation. This is a presentation we shared with our institutions at our interim results, is that infectious disease has already helped us build 20 million in cash. In fact, it's higher than that at this point. We are working to generate significant amounts of cash to focus on M&A. We've got a sizable war chest if you include working capital, which is probably 5 to 10 million we could wind out if we ultimately get out of COVID. But even if we don't, we've got about 25 right now in cash to look at potential acquisition targets. We do have a potential for bank borrowing. I mentioned we've got zero debt. We certainly would consider that. We have engaged a buy-side investment bank, and we've got multiple opportunities under evaluation right now. The focus is on expanding, accelerating cellular pathology, precision medicine. We're looking UK, Ireland, US. I would say we're looking primarily UK and US. We're looking at digital pathology, private healthcare pathology service providers, clinical trials, healthcare diagnostic service providers. There's a lot of companies that are looking to be acquired by companies like Source, where they need the wherewithal and the financial backing to make them successful. We are in discussion with multiple targets, and this is really a key area of focus of myself, Tony, and our senior management team. Is we want to utilize the cash we've generated from COVID and build the base business, and that's really something I want to make sure I highlight tonight. We've talked about the numbers. I think one thing I did want to talk about is the operational gearing here. You know, we increased our revenue significantly without increasing our expense base too much. We certainly know when we scale back down on the COVID side, we're going to scale back expenses. We are already all over that. You know, this is just a good set of financials. EPS way up, operating profit way up, EBITDA is up substantially. We're pretty pleased with these results. Same thing here. I won't really go into a lot of detail unless somebody wants to ask any questions. Cash in June of 2021 was 17. I mentioned it's well over 20 now. We're going to see that be more by the end of the year. So for just a summary and outlook, H1 this year was a period of significant growth for the business. It was transformational in many ways for the business. Revenue was up strongly. I mentioned that before, to 37.3 million. Adjusted EBITDA increased significantly to 11.2. Cash, we've talked about that. Infectious disease continues to create strong revenues, earnings, and cash generation. That's likely to continue, but not at the levels that it was in prior year. The established base businesses for CellPath, precision medicine, and storage have recovered, and they are coming back full steam, especially on the cellular pathology side. We're very excited about that. I talked about the acquisition focus in both sort of the cancer screening business and the healthcare diagnostic space. And then looking into 2021 for the year, we're looking at a increase of about 70% over 2020 and continuing building of cash balances. So that's the presentation. I'm happy to open it up for any questions.
Thank you very much, Jay. Good to see you. Thanks for the presentation. Yeah, we've got time for a few questions for you, which I'll start off by asking. Dividend policy?
What's that?
Dividend policy, you say you got a lot of cash.
Yeah, I mean, dividend policy, we've talked about this when we took the company public. I think we are right now not offering a dividend. I think we're going to put the money toward acquisitions and building the base business. If we get to the point where we can't do that, certainly we would look at a special dividend or some way to return money back to shareholders. I think we want to focus on building the business first and foremost.
Okay. Why did it take you so long to build your lateral flow capabilities?
You know, it didn't take long. We've been working with Excalibur for quite some time. We wanted to make sure we had the right test. There are a lot of false positive lateral flow systems out there. The one that's being offered by the government, quite honestly, isn't very good. We did not want to come out with a Me Too product, so we wanted to make sure that what we have is a very sensitive system, easy to use. Excalibur's got an app on your phone that can read the test result better than the human eye. Everything Genetics got a home test that you can use at home with the result of their online video capability. So we wanted to make sure we came out with a test that was, I hate to say this, that we wanted to put our name on, to be quite honest.
Okay. You mentioned acquisitions. Is there a timeline on, are they any imminent?
Well, I don't want to get ahead of ourselves, but we certainly have the potential for something that one or two that could move along very quickly.
Okay. So when you mentioned earlier in the presentation about the shortage of pathologists, were you referring to the actual recruitment of them, and you can help with that service or not? Or are you looking at it differently?
There's a shortage of pathologists in the UK. There's more pathologists retiring than are coming into the practice. So you've got a skewing of age now in the NHS system. And we actually recruit NHS pathologists. We recruit retired pathologists. And oftentimes it's a nice way for them to segue out of working for the NHS. They can set their own hours. They can set what cases they want to. We've got a network of pathologists. We've got one of the largest networks of pathologists in the UK outside of the NHS. And we definitely are focusing on building that up as we grow the business.
Okay. So this question here: what will be the game changer in terms of growing more market share, because it's a growing accessible market as you highlighted in your presentation? So what can SourceBio do to get a larger part of that share?
I think there's two things we can do. One, we can look at, if we wanted to acquire another provider, we can certainly do that. I think the other thing we want to do is move into the digital space fairly aggressively. That is going to help the backlog situation. That is going to change the way people do cancer screening in the UK. UK is a bit behind the rest of the world, to be honest with you. The NHS has been slow to adopt it. They have decided that this coming year they're going to focus on digital, and we are working with them very closely to make sure we do that. In fact, there's a gentleman on our board, Sir Ian Carruthers, who was a former head of the NHS. So he's been very helpful in helping us sort of navigate the NHS system to do that.
Okay. Have you made any significant signing major contracts?
I would say, on the COVID side, I'm not sure where that question's coming from.
Yeah, I think he's referring to the COVID side, yeah.
We've got, we don't announce every new contract we have. We've got some very large contracts. I won't mention any names. I think sometimes we've got to be careful about confidentiality, but we've got some major commercial contracts. I will say that we have tended to shy away from the DHSC. We were very strong with them early on. We aren't as strong with them now, and we've almost made the strategic decision to go more to the corporate side and the business side for many, many reasons. One of them could be even, the ability to get paid.
Okay. The recent share options to directors means how much is now held by directors and institutions?
Well, I think the directors probably in aggregate. We also granted some for employees. It's probably 5% is what I'd probably say it was. Directors, certainly we took the company public from being a private company, so certainly we've got directors that have shares in the business as well, and that's public, domain. I won't get into that with today, but certainly you've got Harwood Capital, you've got Continental Investment Partners, you've got some fairly big shareholders in our shareholder base.
And yeah, just leading on from that, but you are concentrating on wanting to expand your retail share register.
Yes, actually, we would like to expand our retail share register. We've got to get the volume, but we certainly we're gonna need to do that, and I think that's a very good question. Yes, we're looking to do that.
Okay. Well, I think that's pretty much just spot on there, Jay. Great presentation. Thanks for your time. Good to see you.
Great.
Just to confirm, we'll send the slides out to everybody who's tuned in this evening on your behalf, and look forward to seeing you again soon.
Great. Thank you, Chris. I really appreciate it. Thanks, everyone.
Thanks, Jay.